Hey everybody, it's Brian Shannon here from alphatrends.net. Today's Friday, the 14th of December 2018. Hopefully you made it through the week okay. We did have a lot of volatility here and the market lost some ground. So let's just take a look at the charts. We'll start with the longer term picture first. And here's the S&P 500 on a weekly time frame. I've referenced this volume weighted average price from the March 17 high and how it's been acting as support for quite a while. And like any level of support, the more time it's tested, the more likely it is to fail, and that's what we saw this week. Now we are very close to the volume weighted average price from the election. What that means is the average price that the S&P 500 has traded at since the results of the election is right now at approximately $257.50. That means on average the participants are at about break even. Right now what we see also on this weekly time frame is that this is an important level of prior support as well, or it has been support this year, I guess I should say. And as with any type of support, the more times it's tested, the more likely it is to fail. If we see that this market continues to move lower, which there's no indication it won't because the path of least resistance is lower, then we have to look at what are the next potential levels of support. So what we would do is look at things like a volume weighted average price off the low from 2016, mid 2016, and then from the low of 2016. These become potential levels for the market to drop down towards. It doesn't mean that they will stop there. The volume weighted average price from the election does not mean it will become support, but it has the potential certainly to do so. Let's take a look at the daily time frame, or actually let's go back to the 30-minute time frame of the S&P 500, because this is a chart I had mentioned on the and there it is. I'm sorry for the moving around like that. This 30-minute time frame shows the movement in 30-minute candles over the last month and a half. And what I had pointed out on Yahoo Finance this week was the volume weighted average price levels from each of these peaks and valleys, important levels, the market rallied up towards, and then it found sellers right in that area, right where it was supposed to, basically. And in doing so, what it did on the daily time frame was to create a lower high rather at the declining 20-day moving average. So the definition of a downtrend is lower highs and lower lows, and that's what we see in this market. We saw this peak, we saw a lower high, and then we saw this low and a lower low, and now we're closing below this level that had been prior support. The market does not feel like it's done selling. There hasn't been a big whoosh lower, and I think that next week a test of that volume weighted average price from the election is likely to be tested, and we will see if that does in fact hold as support for this market if buyers emerge in that area. We're in a so-called seasonally bullish time of year. That's what they told us around Thanksgiving as well. But again, when we have a declining 10, 20, 30, 40 week moving average, we're below the year-to-date volume weighted average price and it's turning lower, you have to be very cautious and look at the market as guilty till proven innocent. You can come up with a million reasons why it might be overdone, but the market doesn't care about reasons. What it's about is liquidity, and right now the money is flowing out of the market in U.S. equities. For the NASDAQ on this weekly time frame, we have referenced, of course, the volume weighted average price since the election in here as well, and that looks like it'll be tested this week, coming up. That's down at about 155. This market is also starting to show the potential that we have a left shoulder ahead and maybe some more time over here in developing a right shoulder for a head and shoulders pattern. Now, I'm not calling for the height of this pattern, but a pattern, the height of the pattern subtracted from the breakdown point is what you tend to look for. That would imply a move down of 30 points down towards 125. Maybe it seems outlandish. Maybe that's possible in the next year or so. The way I look at the markets is piece by piece, bit by bit, and looking at it from a swing trader's perspective. And when we break down back below the volume weighted average price from the low that we had seen earlier in the week and found resistance up at the volume weighted average price from the high this month, then it tells us sellers are back in control. And let's just go back to that for a moment on the SPY, because we can see that we came up to the volume weighted average price from the December peak, and that's about the area where we found the sellers. We also saw in there that the direction of this orange 5-day moving average continued to be lower. It looked like maybe it was going to try to stabilize here at the VWAP from this gap lower and from the low, but obviously today we got that taken out, and now we'll be looking at 265-ish as potential resistance on rally attempts next week. Where it really starts to look ugly is when we look at markets like the Russell 2000, and looking at a weekly time frame here, you can see we're well below the volume weighted average price from the election. That's right here, and I don't know why that's not sticking. Let me do this, and we'll of course make it orange because this is where our president came into power. And right now what we'll look at is volume weighted average price from the low of 2016, and that now looks obtainable for this market. You can see that the market came down towards that level here. Now we have the potential 137.5 ish might be the level where we would see a decent bounce materialize, a bounce within a downtrend. If you look at this and say, hey, that's where I'm going to load up my long-term account, maybe that ends up holding as a place. I look at more as a stepping stone towards potentially finding support for the longer term. But what's most likely, I think, if it comes down there and bounces, is that it gets back up towards that VWAP from the election, and then comes down and at least tests it. So know your time frame. Semiconductors have been a mess as well. There's the volume weighted average price from the election. We've been stuck below that for a while. We're also below the 10, 20, 30, 40 week moving average. The volume weighted average price from the September low has been tested and has been being tested recently. If that fails, then we go to the volume weighted average price off the 2015 low and look for the potential that 85-ish is the area for buyers to maybe show some support. We saw, again, same thing in here. People get excited when it gets back above the 50-day moving average, but as I always say, it's the direction of the 50-day moving average that's more important than closing above it. And here we saw from that failed break higher came a fast move lower. Now we have a lower high below a declining 20 and 50-day moving average. These markets are a mess. The biotechs from a longer term perspective are probably in the best place to stabilize, because we have this longer term uptrend and we have this prior band of resistance that is holding as support for the last year and a half. But that doesn't mean that it has to stay here. I mean, we could see that another rally up and then break down and continue lower. Don't be looking for, putting money to work in a market just because it's, not going down at as great a clip as other markets. If the market is going down and it's showing relative strength to a group that's doing worse, it doesn't mean you're making money with it. The point of being involved in the market is not to lose less than another group. It's to make money, and the odds don't favor making money trading long when we see markets below all these declining moving averages. If they don't scare you out, they will typically wear you out. There's no hurry to get involved in these markets on the long side. The financials really were kind of a mess this week as well, because we had seen this prior level that had been tested. It's got stuck under that, what had been prior support, and then it became resistance and moved lower from there. So as long as we're below 25, 25 and a quarter, the sellers are in control of this market. And looking at the weekly time frame, we've undercut the presidential volume weighted average price. Now we look down to, is this going to be a potential area to bounce from, because we've seen so much damage done and we're at the volume weighted average price from the 2016 low. It's certainly what I like to call a level of interest, meaning we want to look at it and say, okay, there is a potential level where the market has enough memory that it might become support. So we look to a daily time frame and say, do we see any evidence of support? The answer is no. We see lower highs and lower lows on these daily candles. The last 3 days it made a lower high and lower low. On a 15-minute time frame, do we see any evidence the buyers are regaining control in here? No, none whatsoever. So we don't buy blindly into these levels. We're aware of them, and we look to shorter term time frames and say, now what what's the evidence saying? The evidence is saying it's not there yet, even for a bounce. By the way, when I'm flipping around on these time frames, always look right up here. This is where you can see this is a 15-minute chart, meaning each candle is 15 minutes. On this time frame, this is a daily time frame. Here we can see there's the week. Let's take a look at the energy names and then we'll wrap this up. Energy is down to the levels from the 2017 lows, and it's stopping here for now. Some people will say it's at support. I will tell you it's at a potential level of support, and it may in fact bounce from here, but I think the more likely scenario is that it bounces and continues to break lower. Don't buy unless you're looking maybe just for a bounce. If you're looking for a bounce, well, then you do the same exercise. You say it's at a potential level of support. Is there any actual evidence that the buyers are stepping up and trying to regain control? And the answer is absolutely not. We still have a declining 5-day moving average. We saw a market that made a lower low this week, and we stayed above it on today, but that does not mean support. It means that we still have downward pressure in this market and the sellers are in control.